Welcome to another audit walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over Audit Area 4. This is Section E3, Remembering and Understanding. Identify the factors an auditor should consider when reporting on an engagement to review interim financial information. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it's free, it's only 1 hour long, and we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing the exam. Now, after you watch that webinar, you're going to want to learn more, so make sure you also check out becoming a Superfast CPA Pro member. Pro members get access to the full 10-question versions of these 5-question YouTube videos. So if you like this and you like our other videos, make sure to check out becoming a Superfast CPA Pro member, because again, you'll get access to the full 10-question version so that you can have a little bit more practice and a little bit more understanding. So with all that, let's dive straight into the questions for this video. All right, here we are at question 1, so let's just dive straight in. Which of the following best describes the objective of an auditor's review of interim financial information for a public company? So let's dive into this. Option A, to provide absolute assurance that the interim financial information is free from material misstatement. Option B, to express an opinion on whether the interim financial information is presented fairly in all material respects. Option C, to determine whether internal controls over interim financial reporting are operating effectively, or Option D, to determine whether material modifications should be made for the interim financial information to conform with the applicable financial reporting framework. So again, kind of what's the objective, what's the whole point of doing a review, and especially doing a review of an interim financial information for a public company? So if you know, or if you kind of know what this is, that's great. If not though, that's okay. We are using these questions to learn about this material. So let's dive into the explanation together. All right, here we are. The answer is D, to determine whether material modifications should be made for the interim financial information to conform with the applicable financial reporting framework. So let's dive into this. In a review of interim financial information, and remember, interim financial information is information that is before the end of the year. So it's, the stuff that happened maybe in September before you actually get to December, or whatever the case is, typically conducted in accordance with PCAOB standards for public companies. The objective is not to express an opinion, but rather to provide limited assurance. And we've talked a little bit about review engagements in the past. This is still a review engagement, it's just about something specific, interim financial information. The auditor performs inquiry and analytical procedures to conclude whether they are aware of any material modifications that should be made to the interim financial information for it to be in conformity with the applicable financial reporting framework, usually GAAP. This is a lower level of assurance than in a full audit. The other answer choices incorrectly suggest a higher level of assurance or objectives unrelated to the review engagement. So we learned a little bit about what the auditor's objective is for reviewing interim financial information. Now let's go to the next question. All right, here we are at question 2. Which of the following best describes a key difference between a review of interim financial information for a public company, which we just talked about, and a review of unaudited financial statements for a non-issuer? So different situations, what's the difference here? Option A, a review for a public company is performed under SARS, while a non-issuer review follows PCAOB standards. Option B, a public company review typically results in no report being issued, while a non-issuer review always requires a formal written report. Option C, a review of interim financial information for a public company is conducted under PCAOB standards when annual financials are audited, while a non-issuer review is conducted under AICPA SARS. And then finally, option D, both types of reviews provide reasonable assurance, but only public company reviews are subject to SEC filing requirements. So what's the difference here? What is the difference between the review of an interim financial information for a public company and the review of unaudited financial statements for a non-issuer? If you know, that's great. If not, let's dive into the answer together. All right, here we are. The answer is C. A review of interim financial information for a public company is conducted under PCAOB standards when annual financials are audited, while a non-issuer review is conducted under AICPA SARS. For public companies, and remember that's an issuer, a review of interim financial information is conducted in accordance with PCAOB standards, which makes sense because it's a public company. And that's specifically AS 4105, but you probably don't need to know that, so I just was throwing it in there, but that's not what you want to focus on. So again, in accordance with PCAOB standards, when the annual financial statements have been audited or will be audited by the same auditor. These reviews are typically performed quarterly and may result in a report if the financials are filed with the SEC. For non-issuers, reviews of unaudited financial statements are conducted under the AICPA's Statements on Standards for Accounting and Review Services, or SARS, not PCAOB standards, because again, it's not a public company. SARS governs both compilations and reviews for non-public entities. Unlike PCAOB interim reviews, these are often for full period financial statements, and that would be either annual or quarterly, and are commonly requested for lenders or internal use. So they're for different things, and they do fall under different rules. The standards differ based on the entity type and purpose of the review, even though both engagements provide limited assurance. So again, we learned the difference there between something for an issuer, something for a non-issuer. Now let's go to the next question. All right, here we are at question 3. Which of the following procedures is the accountant most likely required to perform during a review of interim financial information for a public company? So now we're getting into what is the accountant actually doing for these reviews of interim financial information. So let's go through this. Option A, confirming receivables with third-party customers to validate revenue transactions. Option B, comparing disaggregated revenue data to expectations and performing inquiries regarding any unexpected fluctuations. Option C, testing internal controls over financial reporting by tracing transactions through the accounting system. Or option D, recalculating depreciation expense for selected assets to confirm mathematical accuracy. So what are some of the things that they're most likely required to do in this case? If you know, that's great. If not, again, we are using these questions to learn. So let's dive into the explanation together. All right, here we are at the answer. B, comparing disaggregated revenue data to expectations and performing inquiries regarding any unexpected fluctuations is probably something they would do. So let's dive into this so you can get a better explanation. A review of interim financial information under PCAOB standards is a limited assurance engagement, primarily involving inquiry and analytical procedures. The accountant is required to compare current period data, and that would include disaggregated revenue, to prior periods, budgets, or expected trends, and inquire about any unexpected results or significant changes. Then let's talk about some of the other things that are typically required so that you kind of know a lot of the things. Inquiring about fraud or suspected fraud, reading minutes of board and committee meetings, reviewing interim financial statements for conformity with the applicable framework, obtaining evidence that the interim financials reconcile with underlying accounting records, and considering the results of the most recent audit. So those are all things that the accountant is most likely going to be doing when they are reviewing interim financial information. In contrast, confirmation, control testing, and detailed recalculations are part of an audit, not a review. These more intensive procedures exceed the scope of a review engagement. Again, mainly in a review engagement, you're doing inquiry and analytical procedures, and you're only providing limited assurance and doing all these things that I mentioned. Again, inquiring about fraud, reading minutes of board meetings, and things like that are the things that an accountant would probably be required to do when they are reviewing interim financial information. Now with that, let's go to the next question. All right, here we are at question 4. Which of the following statements about a review of interim financial information is false? So based on everything we've learned so far, you might be able to think about this, but if not, that's okay. Let's go through the options. Option A, a review engagement provides reasonable assurance that the financial statements are free of material misstatement. Option B, a review report may be issued on a single financial statement, such as a balance sheet, for non-issuers under SSARS. Option C, if the interim financial information is included in a document with audited financial statements, it must clearly be labeled as unaudited. Or option D, the accountant must maintain independence in both fact and appearance when performing a review. So which one of these is false, which means that the other 3 are true? So if you know, that's great. If not, let's go ahead and take a look at the answer together right now. All right, here we are. The answer is A, a review engagement provides reasonable assurance that the financial statements are free of material misstatement. Okay, so this is something that's not true. Let's go through this, and then we'll also learn about the ones that are true. Statement A is false. A review engagement only provides limited assurance, and we did talk about that in question 3, not reasonable assurance, which is provided in an audit. The accountant performs primarily inquiry and analytical procedures, not audit-level testing, so the level of assurance is lower. Now let's talk about the other statements because they are true, so these are things you need to know. Option B, an accountant may issue a review report of a non-issuer on a single financial statement as long as the engagement is properly scoped. So again, basic idea here is if it's a non-issuer, it is possible that you can issue a report on just a single financial statement, like just a balance sheet, if the engagement is properly scoped. But a lot of the time, that's not the case. A lot of the times you do have to do a review of the interim financial information as a whole, but it is possible to sometimes, for a non-issuer, just do one financial statement. Now let's talk about option C. If unaudited interim financial information is presented in a document with audited financial statements, it must be clearly marked as unaudited to prevent confusion and avoid implying that it was subject to audit procedures. So if the review is included with the audit papers, it has to be marked as unaudited. And then option D, independence is required for a review, including both independence of mind and in appearance. And we did talk about that in a previous video. You do have to be independent to be performing a review engagement, which is what this is. Even though it's for interim financials and that's kind of a little bit different, this is still a review. Now let's go to the next question. Okay, here we are at question 5. When a company includes reviewed interim financial information in a registration statement filed with the SEC, which of the following is true regarding the auditor's review report? Now, if you have any idea what a registration statement is, that's great. Honestly, when I was learning about this, I had no idea what this was talking about. So let's go through the options and we'll definitely learn about this together. Option A, the auditor's review report automatically becomes part of the registration statement. Option B, the auditor must reissue the review report under PCAOB audit standards. Option C, the prospectus must clearly state that the review report is not considered part of the registration statement unless the auditor consents. Or option D, the auditor is required to perform additional procedures to convert the review into an audit. So again, if you have any idea what a registration statement is, then that's great. But if you don't know the answer to this, that's totally understandable. Let's dive into the explanation together. All right, here we are at the answer C. The prospectus must clearly state that the review report is not considered part of the registration statement unless the auditor consents. Now, if you have any idea what a prospectus is, again, that's great. I had no idea what this was talking about when I was learning about this before. When interim financial information is included in a registration statement filed with the SEC, which by the way is basically how somebody registers with the SEC, the prospectus, this is what it does, must include a statement clarifying that the auditor's review report is not considered part of the registration statement unless the auditor consents. This protects the auditor from being automatically associated with the offering under the Securities Act of 1933, which imposes liability for misstatements in documents used to sell securities. So to make sure that that's clear, because again, it's a little bit confusing, the prospectus is basically the summary, kind of the key points of the registration statement. So the prospectus needs to state that if this interim financial information that's been reported on is included in the registration statement. So if that report is included in the registration statement, the prospectus, so again, basically the summary, needs to say that the auditor's review report is not considered part of the registration statement. It's not part of it. And the whole point of that is to make it so that the auditor is not associated with that and makes it so that they're not under any liability. So that's the idea there. The prospectus, which again is the summary, needs to, for the registration statement, state that the review report is not a part of the registration statement. The auditor's consent is required before the review report can be formally included in the registration materials. So they have to give their consent that it's even included there. And again, the prospectus needs to say that it's not considered part of the registration statement. And now options B and D, those talked about something different. The auditor does not perform audit level procedures or reissue the report as an audit. And option A, the review reports do not automatically become part of the registration filing. Again, they do have to give their consent for that. And I know this might seem like a kind of a weird subject, but this is something that legitimately is material that I think that you might see on the exam. So I wanted to make sure that it is there. So we learned a little bit more about, especially with this specific situation. Before we do anything else though, let's do one more part of the SuperFast CPA process called Pillar Topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up. You've seen 2 or 3 or 4 questions trying to teach you about, oddly enough, the registration statement and prospectus for the interim review or whatever. Again, you notice these things as you're going through the questions. And so you take a moment and you write these out in your own words as the pillar topics, the key points that you learned. So when you do this each day, you are building your own personal repository of the most important things you learned for the exam. And then you are ready for the exam because again, you have the key points written out in your own words. So let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. An interim review provides limited assurance that the accountant is not aware of any material modifications needed for the financial information to conform with the applicable framework. So that's kind of the idea, that's the objective. Interim reviews for public companies are performed under PCAOB standards, while reviews of unaudited financial statements for non-issuers are governed by AUD CPA SSARS. Accountants performing interim reviews must make inquiries, perform analytical procedures, review minutes, and obtain evidence that the financials reconcile to the accounting records. Basically, again, you're just performing a review, but it's on interim financial information. But you don't really do anything else besides analytical procedures and inquiries. Now, PCAOB interim reviews require evaluating internal control design and communicating with the predecessor auditor, but SSARS reviews do not. And then finally, if a review report is included in a registration statement, the prospectus must state that the report is not part of the registration statement unless the auditor consents. Now, I will say that 4th pillar topic is something I'm going to cover much more in the member version of the video. So if you're a little bit confused about that because we didn't talk about it very much, that's because sometimes I add into the pillar topics things that we are going to cover in the member version, just to kind of give a little bit of a hint and a little bit of a sneak peek. Now with that, that is the end of this video. And again, we only went over 5 questions in this YouTube version of the video, but remember, SuperFast CPA Pro members are going to get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other products, make sure you check out becoming a SuperFast CPA Pro member because they get access to a lot of great stuff, including the full versions of these videos. And the easiest way to learn about and become a SuperFast CPA Pro member is by actually going to SuperfastCPA.com and signing up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam. And again, it's only 1 hour, it is free, and it will be so worth your time. And after you watch that, you're going to want to learn more, and it will give you a good path to learning about and becoming a SuperFast CPA Pro member. Now with all that, I hope that you found this video helpful. If you did like it and you did find it helpful, make sure to like it and leave a comment, and I will see you in the next video.